Zillow reported earnings after the market closed on Tuesday, and the market actually wasn't very impressed with what Zillow had to report. As I'm recording, shares are down about 10% on the day on Wednesday, but I think everything is moving in the right direction for Zillow. And if you have a long-term outlook on what you think Zillow is going to be as a business, how this could play into the multi-trillion-dollar housing market, I think there's a lot to like from Zillow. So let's dig into these numbers as a stock that I own in the asymmetric portfolio. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the high-level results from Zillow. And I'm going to start this with their shareholder letter. Revenue was $554 million in the quarter. They did have a net loss of $52 million. And adjusted EBITDA is $112 million. A big piece of that is going to be stock-based compensation. So that's dilution that they have. Always something that I would like to see come down at Zillow. Now, if we go down here to their segment results, you have the for sale business. They kind of break this into basically for sale and then rentals. So for sale overall revenue increased from $371 million to $428 in the quarter. You can see that the fourth quarter is typically down a little bit. Residential was $387 million. This is one that I've been keeping an eye on, is the mortgages revenue and the purchase loan origination volume. The reason for that is Zillow is trying to be a platform company in housing. They want to be the place that you want to list your house, that you want to list your multifamily unit if you have a rental, where you want to sell a mortgage, or tell people that you can do moving services, all kinds of stuff, insurance, all the stuff that is involved with housing. And that's on the supply side. And then on the demand side, buyers and renters, if they're going to Zillow first, that's going to be great for Zillow's business. So that's really the idea behind the business, is to be the platform in between those two things. So you want to see residential revenue growing, for sale revenue growing, listings growing, all that stuff growing. But then once you add ancillary services like mortgages, that can be even stickier. That is also a great top of the funnel for them, because a lot of people who are looking for a home first look at, how much do I qualify for? How much home can I actually acquire? So that's why this growth is really positive for the business. Still pretty small, but something that we want to see growing over time. On the rental side, even more impressive growth, $93 million a year ago, now $116 million. So $25 million worth of revenue growth. So 25% revenue growth. That's exactly what you want to see in rentals. And the most important thing, I think, for Zillow is to continue growing their residential revenue, grew 11%. So you want to grow that in excess of the pace of growth in the business overall, in home sales overall, and that's exactly what they did. And then you also want to see growth in the rentals business, because those are going to be kind of the two biggest markets. Then you can bolt on things like mortgages and insurance and all the other stuff that goes along with housing. The outlook for the first quarter, expecting $575 to $590 million worth of revenue and adjusted EBITDA to be $125 to $140. For the full year 2025, expecting mid-teens revenue growth. That's pretty solid revenue growth, and continued adjusted EBITDA margin expansion. So again, that's exactly the kind of thing that we want to see. And then also expects to be net income positive on a GAAP basis. So that's solid movement in the right direction. But there was actually something I think was even more important, and that was the partnership the company announced with Redfin. This is going to be related to what they call the Rent Network. And Zillow's listings are now going to also go to Rent.com, Apartment Guide, and Redfin. This is similar to a deal they had with Realtor.com last year, and basically just increases that audience. So if you are listing a multifamily unit, this is for 25 plus units, now the megaphone that you get by using Zillow is going to be even bigger. What these companies get is a referral fee if somebody's going to their site and decides to rent with one of these listings. But the platform, again, is going to be Zillow. So that's another positive movement that especially the rentals unit, the rentals business, is moving in the right direction. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. A couple of other things I wanted to show that are relevant to the investment case with Zillow and how things are moving in the right direction. This is just their estimate of the total addressable market. This is the $2 trillion total transaction volume in 2024 across sale and rentals. So you can see that in this top line here. And then the total addressable market for Zillow would be about $168 billion. So right now, that business is about $2.2 billion. That means they have a lot of potential growth runway ahead. But how do you judge if Zillow's strategy is working? And I think this is the biggest thing right here. Their biggest competitor is going to be Realtor.com. CoStar is going to be the company that you're going to want to watch most closely. But Zillow Group is twice their nearest competitor from a traffic position standpoint. Daily active app users among real estate marketplaces, they have 4 times more traffic than their closest competitor, Realtor.com. So really good position, even against a company like Redfin in the homes market. But the same thing is happening in the rentals market. This chart goes back to Q1 2021. Apartments.com is owned by CoStar. And remember, Rent. And that's that suite of websites that I talked about earlier, owned by Redfin. But you can see that Zillow has taken market share from CoStar over this period of time, and a pretty significant amount of market share. This is the average monthly unique users. So this is exactly what you want to see. The housing business, whether you're looking at sale or rental, is going to follow something like the smiling curve on the internet, where the winners are going to win. They're going to take more and more market share. And then those second and third place competitors, just think about if you're listing a house or if you're going to buy a house, where are you going to go first? What's that first click going to be? If the answer is always Zillow, whether you're buying or selling or renting or putting your home up for rent, that's going to be a phenomenal position for Zillow. It looks like the company continues to move in that direction. The financials will follow, but first they need to win strategically. And that's what I think we're seeing with all of this information. Rentals growth just continues to be very, very impressive for the business. Now, this is one company that I think you have to take a multi-decade outlook. Zillow is not going to win the housing market, especially with all the ingrained competition, with all the way that things have been done for decades in housing, and people just don't buy homes all that often. So when you're going to make a housing transaction once a decade, maybe, that's going to determine how Zillow's business is going to do, and they're going to have to win that business over time. But it looks certainly like the strategy is working. More and more people are using Zillow's app for buying homes, for listing homes. And then that rental side of the business and mortgage side of the business is telling you that it is becoming more of a platform, less of a one-trick pony. So that's exactly what I want to see from Zillow. I know that the market wasn't super happy with the results, but remember, the stock has been on an absolute tear. I think that will continue over the next few decades in any of these major pullbacks. I'm looking at it as opportunities as an investor. Haven't bought shares of Zillow for a little while, but if this pullback continues and we could pull back more than 10% over the next few weeks, definitely one that is on my watch list. So let me know what you think about the results from Zillow. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.